Hello, hello, hello. What's going on, everybody? Welcome to Al Stock Trades. How's everybody doing? I was trying to show you the background here, but I'm doing a terrible job being a camera guy. Let me see if I can just show you a little bit here. I like this waterfall. You guys can't hear it because of the noise cancellation, but let me show you this beautiful waterfall. Now I know why it doesn't turn because the camera's being blocked. There it is. See that? See that beautiful view there? You see the beautiful American flags right behind me? And the good old waterfall right here, very beautiful, right? Let's go ahead and get the AI tracking here, right? Hey, back here. All right, good. So in this video, we're going to go ahead and we're going to talk about some really important stuff. I would say this is one of the most important videos, so many important videos we're going to be talking about. And we're going to go ahead and so I went ahead and programmed and coded so many amazing things right now. The platform's ability just exploded by like umpteen X, and I'm about to show you kind of what that means. With that, let's just get straight to business here. So we're going to go ahead and I'm going to give you later on a presentation on Main Street Health and Counterpart Health and explain to you kind of why I have this presentation that I built for you guys. This is going to be jam-packed. Again, this is why our videos are long. We just kind of basically pack a lot of research in. We do have our New Year sale. It's $1,300 off lifetime access, coupon code New Year. Take advantage. It includes all the updates that we have, lifetime access, Discord, and to all the software. We just created this new software, which is on the likes of essentially a Bloomberg terminal, right? And I'm going to show you exactly what that means. We're going to go ahead and talk about those things, talk about Main Street Health, but there's some item, and also we're going to talk about the portfolio hedging modeling system that we have and why November 20th was the year or month where a lot of people were doing tax loss harvesting, and how even Clover they were doing it for as well, and how now we're in that 30-day wash rule, and I believe we're setting ourselves up for a Christmas rally. Now I just want to basically be very clear with you all. What I'm about to share with you is going to be a little bit scary. I was doing some work yesterday, and let me kind of thematically explain to you what I was working on, and then I will then show you, and then hopefully that will be helpful rather than just showing you. You don't understand the extent of this. So let me explain. So last night at about 10 p.m., 11 p.m., I was working on some code. And what I wanted to do is I wanted to ask a simple question. I wanted to say, when has the stock market returned over 18% for 3 consecutive years? Now, you might say, okay, 2023 returned over 20%. 2024 returned over 20%. And then 2025 is on the verge of returning over 18%. It's like 17.6% right now. And yesterday was like 16 point whatever on the market close. And we found something very crazy, and I'm about to show you that. The last time this happened was in 1995 through 1999 on 3 different time series, which I'll explain to you. And we're on the earlier phase of the time series. And that was the dot-com bubble crash. Now, what's interesting is on September 2025, Vivek went ahead and posted about how he believes that this is resembling a dot-com bubble. He has lived through it. And, that right there is that's his experience. And I'm data driven. I like to use data to inform my decision-making skills. And what I basically did is I checked and cross-checked and really looked at the code, and I saw something very interesting. I have mathematically modeled exactly what he said. And obviously he is correct. Then I started to think to myself, and I started to say, well, why did Dr. Michael Burry, the Big Short, the guy who shorted the whole housing market, start to become active on Twitter? This gentleman likes to keep to himself. He's a Cassandra. Cassandra is, mythology for someone who warns for the ever so destruction of something. And then it is a truthful prediction, but no one believes in them. And the fact that Dr. Michael Burry has come to warn us that, I wanted to dig in, and I was doing some research. Just, this is what I like to do every single year. I like to do this research. And normally I do it on a Bloomberg terminal, and then I go in and I give you kind of my year outlook. So then this year I said, I want to give this software capability to all my lifetime access members. So then you're able to basically put different scenarios. Like, let's say if the S&P 500 was down this year, search pretty much all of the times where the S&P was down greater than 10% and find me the collective average of how it performed 1 year, 3 years, and 5 years out. Okay. Now, again, I know this may be the longest intro ever. Probably, maybe you heard the song, but this is not no intro. I'm explaining to you the semantic process. This is very important. And for the people that don't listen, they're probably going to get burned, right? And that, right? So from that perspective, we're going to go ahead and look at the data. And this is going to be a very long video. If you don't like long videos, I don't, just click off, maybe watch it in chunks. This is the real deal. You can't sugarcoat real research, right? All right. So from that, let's go ahead and share with you kind of, so Dr. Burry's now out there talking about this, and he, on his Michael Lewis interview, said that he's shorting Palantir, and he believes that in the next 2 years it's going to fall. And that falls right in line with our mathematical model, which is insane. Now, again, the only way this mathematical model is destroyed, where it's basically what I'm saying, it's wrong, is if somehow AI is able to increase productivity so much that earnings per share grows up tremendously. Other than that, if that doesn't happen, it'll be pretty big. Okay. So yeah, the gray hair came back pretty fast, didn't it? Let's see here. I'm just reading the comments. The only thing that can cause a crash is a catalyst. We can have patterns. Value companies, but they won't crash without big catalysts to ignite. Okay. So let's go ahead and just I would say the Federal Reserve is what destroys an economy or a stock market. So that's another thing too. You have to add. I agree. But let me show you something. I mean, I think you guys deserve to know this, right? So normally to do this, you would need a Bloomberg terminal. But what I did is for the Al Stock Trades terminal, I did a multi-year return terminal where you can look at the S&P and small caps. And then afterwards, I said, well, wait a minute. If I'm going to give this to the lifetime access members, why can't they just put in a ticker symbol and then put multiple ticker symbols and look at the rate of return of how the stocks perform in that region? So that's actually pretty huge. So the next level of what I did is I said, well, if I put United Healthcare, Humana, and all these other stocks, and I group them up and create a portfolio, and I wanted to track how has that portfolio performed over the past 30 years, we have that capability now too. But I'm going to show you the one that shows the S&P first. So what I did here is, and I'm just going to take this off right now. And I just want to just zoom so I can zoom in. So this is the date window. I'm going to go from the 1950s to 2025. Okay. And then this is the rule composite where I'm going to put the rules to see in any time in history has this happened. So I'm going to go ahead and do that. And I'm going to show you. So I want to look at the 3 consecutive years, because 2023, the S&P 500 has done well. 2024, the S&P 500 has done well, and also 2025. So, right now it's at 17 point whatever percent. We'll assume it's 18 because it's right there. I mean, we could do the actual number, but so I have 3 consecutive years back to back. I'm going to analyze when has the last time in history has the stock market went up for 3 consecutive years, and give me the time series of when that has happened. So the first year is greater than 18%, right? Then this one is greater than equal to 18%. And then this one's also year 3 greater than equal to 18%. And I'm going to go ahead and load this. Then The beautiful part about this, it goes instantaneously. Bloomberg Terminal takes a long time. Remember, you're getting access directly to our data centers. Okay, it's very fast here. Okay, so once you go ahead and analyze that, it shows you from the 1950s all the way to 2025 the returns of the stock market for the S&P 500. It shows three signals, three time points of when this happened, right? 1995, 1996, and 1997. Remember, right now, I'm just going to zoom in here. 2023, the stock market returned 24.7%, the S&P. 2024, the S&P returned approximately 24%. This year to date, it's returned 17.2%, okay? Now, we could technically do 17. I think it's going to go up to 18, but we'll just do 17 to make the numbers normalize, which is fine. If we do that, we trigger a signal. We do 4 instances this happened. And you could see 2025 has been triggered. Let me zoom out now so you can see. So you see in this episode, you see different signals. You see 3 signals here, signal 1, signal 2, and signal 3. And this is the first signal. When did this happen? Ladies and gentlemen, let me show you. This happened in 1997, 1998, and 1999. And then afterwards, we had a destruction in the stock market because of the dot-com bubble crash. Now, this here is the first time series. We need about 2 more of these to complete the effect. And we're going to go back to Vivek's post, and we're going to basically combine it all together. And I hope that people have long attention spans, but most likely the world, Instagram, Facebook has made you not want to listen to long form video, and your attention spans are probably less than 50 seconds. And if you have that, then unfortunately you have the mRNA disease, of which is the short attention span that you have, which is going to unfortunately not lead you to master anything, right? It's almost like the mRNA vaccine. It literally infused you with doom scrolling. And if people can't understand this, then you guys will get swept away, right? So let me show you. So now, if we scroll down here and we look at the signal, right? We could see then the stock market got destroyed, right? We go down to the signal, we could see how this historically marks the top, right? We could go in, zoom in, and you could see how this was 1997, 1998, 1999, and then the stock market collapsed. Well, guess what? The signal just came right here, and you can see it hit right here, right? But that's the first time series, right? So the stock market was up 1995, 1996, 1997, 1998, and 1999. Right now, think of it this way: 1995 for 2023, 1996 for 2024, 1997 for 2028. Then you still have 1998 and 1999. So that gives you 2 years, right? But let's go further and let's go lower. So this shows you the time series of when this happened. So this is time series 1, 1995, 1996, and 1997. This is time series 2, 96, 97, 98. Time series 3, 97, 98, 99. And guess what? Here's the first time series. We just got hit on December 22nd, 2025 on average, right? Which is today, right? Like if you look at it, right? 2023, 2024, and 2025. This is the first time series in which the last time it was triggered was in the dot-com bubble. So how did the stock market perform? So on what era are we in right now? So as of right now, from what it looks like, we're performing on the era of the last time series 3, which is kind of scary. 24%, 26%, 17%, 19%. It's almost looking like it's coming very close. Like we might have a good 2026 year, and then 2027 may be trash, or 2028 may be trash. How do we analyze that? Well, we're going to zoom in here, and we're going to go down here, and we're going to look at this analysis that it does for us, the Al Stock Trades Terminal. And what you can see is, what this does is it conglomerates all of these signals that it basically has, and it statistically matches them together and it shows kind of where you are at. And based off of this, 3 months from the signal hit, you get a 7% increase on a mean, 100% positivity. 6 months, you get 10% increase. Then 12 months, you get 11% increase. Now that's weird. You only get a 1% increase in 6 months. So what does that tell me? This is how, listen, guys, let me teach you something, okay? This is how a lot of these folks on Wall Street, like Goldman Sachs, Tom Lee, all these, this is how these people are able to calculate what their S&P, where it's going to go. And what they do is there's another way to do it too, is they look at the average earnings per share and price to earnings of, and conglomerate that to the historical price to earnings multiplied by the forward returns of earnings per share to calculate where the S&P is going to go. And then they backtrack it. The analysts that are actually smart, they backtrack it to this research and they see where it can go. So from what it looks like, the S&P median return on average this in 2026 is going to return 11.2%. So you could see it could return 11.2% here, right? In 12 months. That's what the data is saying. But it's weird because we'll get that in 6 months, which is quite interesting. So what that tells me is that we're probably going to have a run up in the S&P, and we're going to have some form midway in a like a downturn. Now that's great because the last time we had a downturn was April 7th on Liberation Day. And for the people that took advantage when the VIX was above 50, and that's kind of good a marker of a bottom, which we basically did from our all stock trades terminal, which I showed you, right? And I can show you again. You can take that and say, buy the dip. Like, for example, Robinhood, you would have 3 extra money right after April 7th. Go ahead and look at the chart. So I think we're going to get an opportunity to buy on a dip this year or like 2026, right? And then it'll rebound, but the total year-to-date increase will be 11.2%. That's what kind of tells me. That's what that tells me. But that still doesn't answer when could the dot-com bubble crash happen. And from what the data is saying, again, listen, guys. I'm data-driven, okay? Everything I'm telling you is data. I'm all data, right? And then I give this data to my lifetime access members who are all over the world, and they can go ahead and see this is released now. Lifetime access members, you can do this right now and look at the data for yourself, okay? Now, if you go ahead now and look at this, so 12 months out, 11.2% because of the conglomeration of the data, and that is a 67% possibility of like it's going to happen 6 to 7 times out of 10. In the next 3 to 6 months, looks like we're going to be positive based off of like if we are following this pathway. And again, a lot of quants use this historical data. Okay, now 18 months out, we're going to be up 15.7%, and then 24 months out, 10%. You can see it's interesting, right? But then watch this: 36 months out, you're down 4.8%. 60 months out, you're down 12.1%. And then watch this. Look at the average max loss, 5%, 5%, 6%. And all of a sudden, once you hit 36 months, 24%, 34%. So that goes in line to what you're saying here, probably 2028. Again, listen, guys, if I was Sam Altman, if I was Bill Ackman, what I would be doing right now is I would be putting my freaking companies public. I would be IPOing up the booty right now. I would IPO up all the way. I would literally IPO it up. I would put a bunch of stocks in the stock market and I would IPO. And I think that's what's going to happen. 2026, you're going to see a bunch of IPOs. And maybe you might get that runoff in 2027. And maybe that 2028 or 2029 may get that crash. Again, I don't know. Again, I'm not nobody knows. But I'm just giving you what the data is saying. And I'm telling you, I'm not the only one who figured this out. Okay? I am not the only one. Now, listen, Tom Lee always does his, what he believes the stock market is going to be in 2026. Watch. In the next week or two, you're going to see a video from Tom Lee, and I guarantee you he's going to say, on average, the stock market's going to return in 2026 11.2%. I can't cut off my freaking arms. I guarantee you that's what he's going to say, because this is exactly the type of they do. And what I'm doing is I'm democratizing this type of research for you all. So you guys can understand how these big dogs on Wall Street are doing this. And I want to give it to you and literally take that data, right? Like Thanos taking this earth and literally bringing it to you into your home, right? So from that perspective, that's how, these people figure it out, okay? So now your next question that you should be asking is, okay, fine. We know that we may be in a bubble, which makes sense because if you look at, free cash flow of Palantir, yeah, it's high. But if you look at the overall, you know, it's making what, $4 billion in revenue, but it's like almost four to $500 billion in market cap. That doesn't make sense. Okay. It's just the amount of billionaires that have been made within the Palantirian administration, like the folks that are in the executive branch, is more than the actual billions that they brought in. So, this is starting to look pretty bubblish, right? The question now is, when is this bubble going to burst? Ray Dalio came on CNBC and he said that we are 80% to this bubble. Again, I'm not as good as Ray Dalio. He's freaking smart. I don't have a percentage of where the bubble is, but I have this data and I'm sharing it with you all, right? Okay, so Musk is going public big time. Exactly. The biggest IPO in history, also SpaceX. Exactly. You're going to start seeing these companies go public. You're going to start seeing them, and then that is when the market's going to become frothy. So what does that mean for us? Clover is going to be profitable in 2026. Vivek and all of them, they're gearing for this. They're going to most likely want to release some counterpart revenue. Honestly, they may dilute shareholders on the top. For Clover, they might want to raise capital. Who knows? I'm just telling you guys, if I was running Clover, that's what I would be doing right now. I would work hard, become profitable, make the freaking company explode like SoFi, and then do some dilution, so I can just keep growing the business. Again, they might not do that, and they may say the Medicare Advantage company can basically take on that dilution factor, and they'll just use the profitable cohorts to pay off the growth of Counterpart Health. But the big thing here that I'm trying to tell you guys is I'm expecting Clover Health to explode, right? And it's going to explode in this era. The issue is just like Vivek was saying, it's okay to make money in a bubble. Just don't be stupid and think that you're not in a bubble, right? So my thing that no one's going to help you with this. I can't help you with this. This is what I'm going to have to figure out. And I'm going to be designing a code to figure this out because I'm data driven. And I got to figure out when to sell, right? When to sell, because there will come a time because okay, fine. Clover Health goes to 30 or 40 and then all of a sudden it drops down to $5. I want to sell at 30 and 40 and I'll just get back in at 5 or 10. Who cares, right? I'm going to be able to take that money rather than just writing it down. Okay. So that's the thing that I'm trying to figure out, right? And that's going to be the that's going to take me a lot of code to do, but I trust the code than opinions, right? I rather do data. So now that we went ahead and just kind of talked about this, and now you see the data. Now, so as I was programming this, I said, okay, fine. We're looking at the S&P 500 here. We can also look at IWM. If you look at IWM is here, no signals, right? But the S&P there is. So then I said, well, okay, let's go ahead and look at stocks and see how they perform. So let's just look at Humana, and we go into Humana, and I just want to just zoom in. Forget the yellow, forget the signals, ignore that. I want us to focus on Humana right now. And I just want us to just focus in this area here. So the stock market was returning a lot of money during this bubble, right? 1995, 6, 7, 8, 9. The stock market was returning a lot. Humana wasn't. In fact, the last year of the dot-com bubble where it made so much money, because remember, in 1999, you have the data here. In 1990, let me show you. In 1999, watch. In 1995, the S&P returned 19.3%. In 1995, Humana returned 21%. In 1996, Sorry, this was 1996. My apologies. Here's 1995. I messed up. Sorry. 1995, the S&P returned 34%, even more. In 1995 here, it only returned 21%. In 1996, the S&P returned 19%. But in 1996 for Humana, it was down 29%. In 1997, the S&P returned 31.7%. But Humana in 1997 returned 9.9%. In 1998, the S&P returned 26.1% positive. In 1998, the Humana returned negative 15.7%. The last year of the dot-com bubble, the S&P returned 19.6%. Humana did the worst it's ever done. It returned a negative 57.3%. Negative. Then right after, when the dot-com bubble started to collapse and the S&P in 2000 returned negative 9.3%, guess what Humana did? Humana gave the biggest erection of them all. It returned 101.7%. It literally went to the moon, right? So we got to like think about that, right? But overall, 2001, 2002 was bad, and then all of a sudden 2003 it returned 121%. So from what it looks like, you know, if you look at, let's say, 2001 negative 21%, 2001 negative 10%. So it did go down, but there was instances where it did go up. And this is the issue. So whenever you have a crazy high return in relative to the intrinsic value, and I'm sure the intrinsic value during that time, we could calculate it using the intrinsic value calculation and the financial 10-year analytics metrics chart. Again, we are all data driven, right? I'm sure it probably touched above its intrinsic value back then. And we'll be able to do that. But it's quite interesting because if you look at CLOV real quickly and analyze its perspective, in 2022, it was down 76%. In 2022, it was down another 77%. I'm sorry, hold on. Let me make sure. Sorry, 2021, it was down 76%. 2022 was down another 77%. 2024, it was 2023, it was break even at 0.1. And then 2024 happened, which is here. You can see in the upper left here, you can see this here. It returned 228%, right? So whenever you have these, and we obviously know it returned more than that, it went up like 600%. So whenever you have these abnormal gains, it's probably sufficient to peel some off of the table, right? And that has to, be reflective with the intrinsic value, et cetera, et cetera. And then this year we are down 16.9%, which is quite different than where we are down in 2023, which is negative 77%. So obviously the level in which we are down is different. Now you might say, well, we're down from our peak, Al. Well, again, you don't memorize, that's intraday peak. That's not the year-to-date analysis. Now, if you go to Humana really quickly, and you might say, I don't, Humana, Clover is down a lot. Well, listen, guys, let's analyze this, okay? So let's look at one time series. So we'll do one time series, and you see how the bottom changed here? And let's say less than or equal to 30. When has Humana, let me think. Negative 30, sorry. When has Humana lost more than 30%? And the last time it happened, it was 4 times Humana has lost more than 40%. And the earliest episode that this happened was 1986, and the latest episode was 2024. Guys, listen, this is exactly what hedge funds do, okay? Like, this is like, nobody on YouTube is doing this, right? This is like unheard of, okay? Like, you see this scroll bar here, how it's green? That took me 2 hours to freaking code. Like, like, it's tough shit. All right, so this happened 4 times. You could see one here, and one here, right? One was 1999, right before Humana exploded, right? So let's analyze this. So it happened. You can look at the data points. Usually this marks the bottom for Humana, and you can look at it here. Mark the bottom here, and then it went crazy. And then we could just kind of look at it most recently. It happened here, and it marked the bottom, and then you could see it's been going up. So, and now it's slowly going up of its 200-day moving average. You can see from the chart here. Okay, it's hard to see on YouTube, but that's why it's good to have the software. So now let's go down and let's look at it. So it happened in 1986, 1999, 2008, and 2024. These are literally big eras. 1986, guys, is near that the crash of 89 almost, right? So let's look at this. So how is it gonna perform if you look at it from this? This is the analysis summary for Humana. This is the comparison for the S&P 500, which actually I found really incredibly useful. But from the context of this discussion, we'll just stick with this for right now. Okay. So for the horizon, if you conglomerate 1986 data, 1999 data, 2008 data, and then 2024, let's see where it's gonna go. So in 3 months, the mean is about break even. In 6 months, it's going to be down. 12 months, it's going to be up. So what does that tell you? Most likely healthcare is going to be up in the next 12 months. Now, again, we have an administration and we have to look at the star ratings. There's like more to it. You have to kind of, again, it's like an onion, right? You have to think through multiple lenses, right? You have to, like you have a gun, right? You have a laser pointer. You have the sights you got to look at. You got to look at the wind calibration. You got to look at the intrinsic value. You got to look at all these things, okay? But from this perspective, we have 100% probability it's going to be up. 100%, pretty much 100% probability stacked that in the next 5 years, Humana is going to be up 199%. So what's the stock price of Humana right now? Okay, are you starting to see the power of the Al Stock Trades terminal? Again, if you want access to this, you can use this right now anywhere in the world. One-time payment, lifetime access, and you get to send this when you die. You get to give it to your children. This is meant to create generational wealth if it hasn't stuck in your head yet, okay? Now, Humana is $257 right now, and a lot of our legendary investors have been purchasing it. In fact, especially United Healthcare, Michael Burry said if you want to buy healthcare stocks, you should be buying, whatever stocks you should be buying right now, it should be healthcare because they're unwanted. In the stock market, you want to buy from people that do not, that you want to buy from people, you want to buy from a sector that nobody wants. It's like plain and simple, okay? Let me just open up the ChatGPT here. Let me just kind of say something. So, if I have 257 and if it goes up 199%, what would be the number? Just so I can get the accurate here. And then you correct me if I'm wrong. ChatGPT does math wrong sometimes. So we'll see if it's right. So the final number is that's about right. The final number is $768. So it thinks that, in the next 5 years, Humana is going to be pretty much $768. So we're going to end up making that video, do that analysis, and we'll put the price target. I think the healthcare is definitely to be in, right? So it's about, it's above $700 pretty much, right? In the next 5 years. How do we know that? Because that's 60 months, right? That's 5 years, right? This gives you like 1 year, 3 year, 5 year analysis. So there it is. And then guess what? Our software doesn't stop there. Let's say you want to look at a basket of stocks. The problem is you can look at the healthcare sector from the S&P 500, but the S&P 500 healthcare sector, it includes other weird companies that are not managed healthcare stocks. So you can go ahead and put Humana, and then you watch this. You just put space, watch this, and you put UNH, right? So now what it's going to do is it's going to pull data from Humana, and it's going to pull data from United. and then it's going to make them have babies, and it's going to combine it and do a statistical variation analysis. And then it's going to go ahead and take this analysis and it's going to input it together. So you know how I told you, in 2000, it returned 107%. Well, if you combine United Healthcare and Humana, it'll actually return 115%. Why? Because United Healthcare did better, right? So you see how powerful that is. So this is really cool because you could put Palantir, you could put like or let's say you could put banking stocks. Watch, you could put like Bank of America, Wells Fargo, JP Morgan Chase, and you can look at the banking sector. You can put the oil field sector. In fact, energy is actually at a cyclical low now, and most likely energy might actually outperform this next year because we need energy, right? So there's a lot of like just amazing again, guys, it's the average investor doesn't have access to these tools, which is why the average investor loses against the S&P 500, right? And that's why it's important to just go the S&P 500 and not kind of bother yourself with this. But if you want to learn and if you want to like get above average market returns, then do as in Rome what Romans do what these hedge funds do. And this is exactly what they do. Right? I showed you yesterday in Dr. Burry's video about Benjamin Graham and intrinsic value calculations. All right. I hope that you're starting to see all the puzzles come together. Okay. Now, so let me think. Okay. So we did this and, we spent literally 38 minutes doing this, which is insane.
Hello. Testing.
Oh, yeah.
Hello.
That's crazy. Wow. Can you tell them to see if they can't do the outside microphone? Tell that lady in there. Yeah, because this is like, yeah. Sorry, guys. There's an event happening in the golf course. It's a party. And the microphone is outside as well. But it's like, can we just turn it off? Right? If you hear it, I'm sorry. Right? Okay, so let me think. Let me take a break because this is like really stimulating. And let me look at the questions. I'm just reading the questions now.
Everyone. Thank you guys for coming out tonight to the Mountain Point High School.
I'm going to mute this for a sec. Hold on. All right, I'm back. I was just like reading all these questions, and these are all amazing questions. Absolutely. We are going to start infusing smart money by SEC 13F filings. There's a lot of things that we're going to end up doing, guys, with this. Again, guys, I know how to program and code, and I also know finance, and I'm also a scientist. So having a combination of that, and now I'm a medical doctor. Holy crap, right? Having a combination of that really makes for a very useful software, right? If you just speak to developers right now, nothing against developers, but when they program something, they don't understand how. This is why like a lot of developers that make like software, it ends up failing because they don't know how this like you need. That's why it's important to have like a product manager and all these things and be able to understand, how to effectively use the software to answer a specific question. And for me, I've designed this to be faster and better than a Bloomberg terminal at identifying tasks like these. Okay, so from that, to answer these questions, yeah, I mean it's definitely interesting, and again, it all goes back to free cash flow and whatnot. But here's the issue: the issue is if this stock explodes more than what we know and past its intrinsic value, then I might be tempted to sell, right? Because I'm gonna have to look at it, right? Again, you're starting to realize kind of this is not like the go to the moon channel. This is all data driven, right? And when the data says otherwise, again, it's very difficult to time the market. It's very difficult to try to, time the 10 best days, but I'm going to be analyzing insider selling from Vivek. I'm going to be doing a lot of these things. So going back to here, and if let's just like go back down to this analysis. This is for the S&P and not Humana. It looks like within the next 12 to 24 months, we could have the start of this crash. Again, nobody knows, but if you go here to go to Vivek, and if you go down here, hold on for a sec, guys. All right, perfect. Sorry, guys. Let's go back. Let's go back. All right. All right. So, um, let me. So I need to show you a couple things. All right. So this was my research that I just showed you right now. It's pretty interesting. Again, there's gonna be a lot of bulls and stuff that don't like it. Again, I'm not a prima bull. I'm not a prima bear. I'm data driven. Okay. Now here's this. Now check this out. This is what Vivek was saying. So this was back in September 19, 2025. He says, the bubble we're in now feels like 1997, 1998. Guys, this is exactly what the data we're getting at right now. I mean, you literally see the freaking data right here. It's literally like right freaking here. Literally. That's literally like data says it right there. He says that before this bubble bursts, there probably are another one or two melt ups over the next 12 to 24 months. And to be quite frankly honest with you, I think these are probably what these melt ups are at. Or the average max gain, you could see it, is going to be anywhere between 17 to like 26% compounded, 17, 23, 26, and the average median is going to be 11%, 15%, and 10%. He says that investment banks have yet to get in on the action. So I expect the banks to try to take a bunch of AI companies public to satiate the appetite. It's totally okay to invest into a bubble. Just don't be stupid thinking it's not a bubble. So yeah, I think there's gonna be a lot of IPOs. And the fact, again, guys, you have someone, Vivek is, I'm so happy. Like Vivek is, again, you need someone with experience, and Vivek is very clearly experienced, right? So many fortunes have been made before many fortunes have been made selling before a top, right? So selling before a top. So let's say, for example, you sell at 60, but the stock goes to 100, whatever. It's okay, right? But guess what? More fortunes have been lost holding all the way down. Again, Amazon went down over 90%, right? I'm not saying that's going to repeat itself. I'm just telling you what happened in the past, right? So a tiny set of companies will be special ones. Have your short list, right? And have dry powder for when the valuations get super attractive. And that's exactly why he's selling. He pretty much what he's saying. It's better to sell before a top and miss on that and wait until, valuations get super attractive. Yeah. So then he gives, a message to founders. He said, well, if you're a founder and you're too young to remember 1997 through the aftermath of 2002, then ensure you have someone who you trust around you that has strong pattern recognition from that time period. If you do remember 1997 to 2002, and are in are short the market, don't let your ego get the best of you, right? So it's kind of this what I have there. So I'm gonna just switch gears right now, and I'm gonna talk about just Clover Health really quickly. I'm gonna go through this mainstream with you today, but I'm just gonna give you kind of my psychology of kind of why I pulled this together. So, a couple days ago, someone from Main Street Health looked at my profile, and I was trying to figure out, like, because again, guys, I'm like a medical student turned medical doctor, and I don't have any experience in this arena, right? Main Street Health does not look at someone from the University of Arizona College of Medicine, Tucson, right? So I was like a bit like weirded out, like who are these people? So I started to look at him and I started to realize that this is actually a company for value-based rural health. And then I looked at him and I said, wow, they're like almost sounds like Clover. And then I looked at their CMO and I saw that this lady here, the doctor, she testified in front of the House Committee for Health. And then I put the testimonial here for folks to read. Then I went deeper and I said, well, remember when we hired Blaine, who has an amazing smile? Well, we also hired Shannon. These are two talented people. This guy is more for enterprise. This guy's more for rural health. But guess where this guy came from? He was actually a hire from Main Street Health, which is the leading value-based care for rural health. So I'm like, okay, so that's quite interesting, right? So then I looked at him and I said, oh, wow, he was at Main Street Health before joining Clover and president of market operations for the Gulf region for, Counterpart. But he was, before joining, Clover in September 2025, he worked full-time, going from senior vice president of operations to president of the South region, president of the Gulf region for Main Street Health. So I wanted to look more deeper into Main Street Health, and then I realized that they like to improve quality star scores by 42%, 23% reduction in hospitalization, and 9% reduction in the PR, from this PR newswire that they published of themselves. So I was like, okay, this looks like, is this like a partnership maybe for Clover, or is this a competitor for Clover? Again, I'm just trying to understand here, right? I will do a separate presentation exploring that, but I just wanted to just show you kind of the thinking here, and we'll be talking about that later. What I would like to do right now is turn my attention to the portfolio hedging modeling system that we have. Every year, we go in and put in stocks that I believe are winners, and you can see NVIDIA up 36%. Obviously, NVIDIA was a selection when it was like in the when it was $171 pre-adjusted split, which would make it $17. Now it's $183 pre-adjusted split, post-adjusted split. So it's up more than 10x, right? But this is just at the beginning of the year to look at the beginning of the year analysis. And from what it looks like, really what killed us is Lululemon. But it's on the uprise now. But you can see this is the performance of the portfolio. And at one point, the portfolio in green was up 22.727%. So up more than 22%, while the S&P was up 17%. So definitely clear outperformance here. And it was a peak, right? But there's something very special about this portfolio. It is selected by it has it's just an algorithm that I follow of purely selected stocks that have a specific criteria, but most specifically are cross-calibrated between legendary investors SEC 13F filings. And it doesn't get rebalanced. It's just a one-on-one. It has been destroying the market. But this year is pretty interesting. This year, it was doing pretty well here, and it was doing pretty well here. Usually it doubles, right? 16% versus 8% the market, right? But for the first time ever this year, we're at 17.67% to 17.18%. Still outperforming, but interestingly, at stabilization. So what that tells me is that the market most likely is going to start broadening out, okay? But here's another thing, what this tells you. There's two more other things that I can tell you. So if you zoom here, you can see that the green is the portfolio hedging modeling system. Just think of this as hedge fund activity. And the red is the S&P. As the S&P was going up, this portfolio was drastically going down. In fact, it dropped like 1,000 basis points while the S&P was going up. Now, you might say, well, that's crap. Well, no. This shows you hedge funds were leaving the market before the retail investor S&P 500 sensed it. So it shows you that in February and in January, hedge funds were selling stock in anticipation of Liberation Day. And then you got a cross section. Hold on for a sec. Hold on for a sec. All right. All right. all right. So you can see how once it crosses over, it's like hedge funds are short the market. And then it crossed over here, May, and then that's when it performed heavily, right? So this tells you hedge fund activity of what hedge funds are doing. Now, the third thing it tells you, you see here how it really underperformed on November 20th. What happened in November 20th? Something happened in November 20th where both the S&P and the portfolio hedging modeling system underperformed, right? So November 20th is when tax loss harvesting commenced, okay? So let me just give me a moment. Let me see if I can find something to show you. Okay, so I just need you to remember the date. November 20th. Just put that in your head. Okay? Just November 20th. Just remember that. As I look through this post. As you can see, guys, I'm very passionate about this. You know what I mean? Like this is like, pretty passionate about this. One moment here. Let me see this. Got it. I got it. Okay, so let me open up this. Let me go here. And let me zoom in. Okay, so this was a post by Dr. Michael Burry. He said this is November 26th. When did I tell you to remember the date? I said November 20th. November 20th is when this dropped. Okay, now on November 26th, he said, this is a great time of the year to find great companies being sold down too far as a result of window dressing and tax loss harvesting. What the hell is window dressing? Many managers do not like to show they have owned big losers at the end of the year. I, on the other hand, do not mind at all. I don't give a crap. I own Clover. I don't give a shit. I'm buying more. Okay. I agree with Dr. Burry. Okay. But a lot of these fund managers, when they show their clients their results, clients are going to say, why are you holding this stock that's down 40%, et cetera, right? And they just cut it. November 20th was the cut of tax loss harvesting window dressing. Now let's go to Clover and let's see if we find the same pattern, okay? So now let's go ahead and let's go now. We'll go to CLOV and we'll go here, okay? And we'll zoom in, okay? Now let's go and do 6 months. What do you see here? We went from October 2nd, the beginning of October. Again, I said November 20th, but let's just look at October, okay? The stock went from $2.53 and went up 50%, and it went up $1.28 to $3.81, even higher, $3.90. It was this intraday high. And all of a sudden, it collapsed down another 43%. But where did it? It looked like almost like a V shape here, where it literally went from here all the way to a high of another 27% increase, now consolidating to 20%. Guess what date that was? That was November 20th. What date did I tell you to remember? I told you to remember November 20th. Ladies and gentlemen, this is not rocket science. This is our stock trades. We are data driven. We follow the data. Okay. That is everything that I do. I am just data. You could tell Michelle, I am data. That's all I do. Okay. So what does that tell you? Right? What does that tell you? Well, tax loss harvesting is, that means in the new year, I'm expecting Clover to go up. Now, we do have that terrible Q4 year. So what is Clover going to do? They just released some data of them growing over 140, 450%. If you annualize it, it was actually from that greater than 80%, over 1,000%, technically. Could they give a revenue? Could they do that of Counterpart? I don't know. Are they going to show the guidance and it's going to be crazy high net income given the CMS rate notice, et cetera, et cetera? Q4 is going to be terrible. I know retail investors, maybe they might sell. Who knows? All I'm telling you is the tax loss harvesting is going to be over and it's going to be a new year. And what is special about 2026? Clover Health is going to be GAAP profitable. And that was from their mouth. Okay. So from this one, I'm telling you, and I hope listen, guys, I'm just giving it to you and connecting all the dots. There's nowhere on YouTube that will do all this. The amount of data, we're talking over 10,000 lines of code I just showed you right now, right? It's amazing, okay? So we got 4 stars, rate notice, et cetera, all that with a payment model. Now, if you like this, and if you want more of this, and if you want lifetime access of this, because when I start residency, I'm not going to have time to go on YouTube. Prices will be increasing after this New Year sale is over. The mastering course is going to go to $5,000, right? The lifetime access. It's going to, when I say course, it's misleading. It is not a course. I'm not selling a course. I'm selling a software, and I teach you how to use the software with the course. I'm selling software that's actionable, that has over 2.5 billion outputs of institutionally graded data. Okay? I went from homelessness to becoming a medical doctor, now multimillionaire. And now I'm sharing with you guys what I used to basically get me to this level. I can't guarantee you that you're going to get where I'm going to get, but you could talk to lifetime access members. A lot of them are millionaires now. Okay? So with that, if you want access to our platform, lifetime, where you can just transform, you can, like, when you die, you can give it to your children. Hopefully you never die. You can literally give it to your children, right? There is no software on this planet that someone is doing this. That's why I don't want to raise any capital. A lot of folks came to me, they're like, hey, do you want to raise capital with us? You can increase your growth rate. We can give you advertisement. They did not like the idea that I wanted generational wealth and I wanted people to pass this on to their loved ones. They didn't like that because, again, that's not a business. And I agree, it isn't, right? But that's what I want to do. So if you guys want it is expensive. We are going to be increasing prices, right? I mean, trust me, if it was cheap, I'll give it for free. But this information is not free. Nothing free is good. Look at Facebook. You are the product if it's free. So if you want access, go to alstocktrades.com, pick whether mastering or bundle. Pick the cheaper one, mastering, if you want, right? It's only $50 difference. Use the coupon code New Year and go ahead and get yourself lifetime access, right? Again, guys, that's, the data is there. The data is there. Look at our lifetime access members. They're very excited. They're very happy, right? Again, when it comes to, customer satisfaction, I ensure that my members in lifetime access, I give them whatever they want, right? If there's something that they want, I ponder it. I'm like, let me get back to you. And I try to figure out how can I give this to them and what, because again, I'm not a computer scientist. I'm not a software engineer. I'm doing this. I'm like jerry rigging this shit behind doors, right? So I'm doing the best I can, right? And I hope you see, right? I'm jerry rigging this whole thing, right? So we'll just jerry rig this together, okay? And it works. It's good. It's good, isn't it? It works. So let me see here. One moon, one Lambo. So watch the video, right? I wish I can tell you, right? 1 to 2x. Yeah, we kind of talked about it, right? My money. Okay, I 2x'd my money with the platform in 3 years while putting 3 kids through college. Holy shit, right? You 2x'd your money with the platform in 3 years, and guess what? When those kids finish college, I expect them to be on the platform because I'm trying to create generational wealth, right? I want those kids to be using the platform, okay? Because that's what it's all about, is being like, all this, Bernie Sanders and all these folks, oh, yeah, we want to help the poor. Put your words where your mouth is, right? This is how you do it. You teach them how Wall Street is making money. That's how you do it. And this is what it is. If the data was free and all the shit was free, I would have given it to you for free. Okay. But it's not. I'm paying this. Like, this is expensive. Okay. But not to worry. One-time payment, lifetime access. Now, sell puts, calls, roll when needed. Exactly. And that bread is going to go to my real estate company. Absolutely. With the covered calls and cash secured puts, which we made videos on, and we'll bring those videos back. Man, you keep asking those questions, shows you are still retail. I know, right? Yeah. Al, given the CMS change 2027 metrics, I suspect that CLOV might receive some relief in 3.5-star rating because, well, yeah, I mean, I think, we talked about that. I really think so. They pretty much said the surveys are garbage, which is what Clover got dinged on. So, I mean, like, I hope they can give some relief. I mean, heck, give a company a slack. They have the #1 HEDIS quality score measure. I mean, think of it this way. It's like, think of it this way. This is kind of funny. It's like you have a student at a college who graduates top of their class and everything, and yet the guy, leaves, or girl, and they can't get a job. Does that make the institution look good? Of course it doesn't. It makes CMS look like a joke. So they need to obviously do something, right? It just doesn't make sense. How do you have the #1 HEDIS quality clinical measure and then get downgraded? It's a joke, right? It's a joke, and they know it's a joke. Al and his platform. No, it's our platform. It's not my platform. It's our platform. Is the best investment you ever will make in life. And I appreciate you. I love you. And you see that? You see, it's not my this is our platform. This is our listen, guys, this is lifetime access. It's not my platform. This is our platform. Okay. Right. And this is the beautiful part about this platform. This is the beautiful part. Check this out. Is that, yes, the data is impressive. Yes, you saw some really crazy shit right now, right? The data is impressive. But you know what else is impressive? Giving you the data, seeing how your mind adjusts, you start asking better questions, the data gets better, it's a positive feedback loop, and you start looking at stocks and you find those freaking diamonds in the rough, right? And guess what? We are all in it together, and we start talking about it inside our platform, right? And that's how we make, some cool stuff, right? So that's it, 100%, 1,000%. The gift that keeps on giving year round. Absolutely. We have lifetime access members, and they just like look at it like another upgrade. We just gave out 2 upgrades today, right? And there'll be more. There will be more. I am a scientist. I will always evolve, and I'm not some bullcrap woke scientist. I'm a real scientist, right? I'm not a woke scientist, right? Now, CLOV can be 3 stars with 700 basis point reduction on CLOV. Exactly. There it is. You're kicking people's butts, man. You got it. There it is. Specifically, that 700 basis point on that cohort, not the whole thing, on that specific cohort, right? But we've seen year 4, they saved 20%. So we could technically backtrack and look at it and calculate the savings. Pretty cool, huh? All right, guys, I appreciate you all. God bless you all. We're in this together, and this is going to be so fun. This is the first time in history that this is getting documented in real time. And it's so cool. Like, this is so freaking cool, and it's alive, and we could talk to each other, and just like, this is so freaking cool. Because I've won a lot in life, right? You've seen my story. I've won a lot. But this next win is going to be a win for all of us, right? We're all going to win, right? And I'm so excited to see that vision come through. I love all you guys, and I'll see you on the next one. I appreciate you, brother. Dirk Tito. You've been here for a while. Welcome, welcome. And of course, Merry Christmas, Merry Christmas. And let me see here. Joey, comment on it in the Clove Tart chat. And then so I know, right, the video is going to be over, right? And hold on, wait. Comment on it and show me the company, and then we could talk about it. Merry Christmas, everybody. That looks like a picture of Jesus, I think. Right? Merry Christmas, Shant. Love you. All right. This time for real. I'll see you on the next one.